Imagine waking up tomorrow and discovering that you own a tiny piece of Apple, Tesla, or Google. Sounds impossible? What if I told you that millions of ordinary people do exactly that without being billionaires? In fact, some people start with less money than the cost of a pizza. So, how is that possible? The answer is something called the stock market. And here's the surprising part. The stock market has created more millionaires than almost any other wealth-building tool in history. But before you think it's some secret money-printing machine, let's understand what it actually is. Most people hear the word stock market and imagine complicated charts, flashy numbers, and financial experts yelling on television. But the truth is much simpler. Imagine a company is like a giant pizza. Instead of one person owning the entire pizza, it's cut into millions of tiny slices. Each slice is called a share. When you buy a share, you own a small piece of that company. That means if the company grows, becomes more successful, and increases in value, your share can become more valuable too. Let's take a simple example. Imagine a company starts selling a new product that becomes incredibly popular. Sales increase, profits increase. More people believe the company will be successful in the future. As a result, more investors want to buy shares of that company. And when more people want to buy than sell, the stock price goes up. That's one of the main ways investors make money. For example, if you buy a stock for $100 and later sell it for $150, you've made a profit of $50. Sounds great, right? But here's what many beginners don't realize. Stocks don't always go up. Sometimes companies make mistakes. Sometimes the economy slows down. Sometimes unexpected events create fear in the market. When investors become worried and start selling, stock prices can fall. That same $100 investment could become worth $80 or even less. That's why investing always involves risk. So who decides stock prices? Is there one person controlling everything? Not at all. Stock prices are mainly driven by one simple idea: supply and demand. When lots of people want to buy a stock, the price rises. When lots of people want to sell a stock, the price falls. Every second of every day, millions of investors around the world are making decisions, and those decisions constantly push prices up and down. Now here's where things get interesting. Many people think successful investors spend all day staring at charts and trying to predict tomorrow's stock prices. But some of the world's most successful investors do something completely different. Instead of focusing on tomorrow, they focus on years from now. They look for strong companies and give their investments time to grow. Think of it like planting a tree. If you plant a seed today and dig it up every week to check its progress, it will never grow properly. But if you give it time, water it, and stay patient, it can become something enormous. Investing works the same way. The stock market rewards patience more than excitement. In fact, one of the biggest secrets of wealth building is something called compound growth. This happens when your investment earns returns, and then those returns begin earning returns of their own. Over time, this growth can become surprisingly powerful. That's why many investors focus on consistency instead of trying to get rich overnight. They invest regularly, stay patient, and allow time to do most of the work. So, what is the stock market? In the simplest possible terms, it's a marketplace where people buy and sell ownership in companies. It helps businesses raise money to grow, and it gives ordinary people the opportunity to participate in that growth. It's not a guaranteed path to riches. It's not a lottery ticket, and it's definitely not a get-rich-quick scheme. But for people who understand it, stay patient, and think long-term, it can be one of the most powerful tools for building wealth. And the best part, you don't need to be a billionaire to start learning about it, because the stock market isn't just about buying stocks. It's about understanding how money, businesses, and wealth creation really work. And once you understand that, you'll never look at the world's biggest companies the same way again. Next time you see a product from Apple, Tesla, or Google, remember this: you don't just have the option to be a customer, you can also be an owner. Subscribe for more financial knowledge.